Mr. Bagga, I want to come back to this. Today, if we say, consider someone who is an MBA, has been working in an office, and the employment scenario is also not giving you high-paying jobs. There's a reason why people have moved to this. This was a better alternative. Would we really want to tell them that, no, it's okay, go back and look for those jobs, maybe at a huge cut in what your income is, just because it's stable? Is it time to choose stability over what the market gives you, or have faith in the market?
No, you have to have faith in the market. I have lived in this market for 35 years, so I will say you have to have faith in this market. It's gone from 100 Sensex to 80,000 Sensex. So we are a very fortunate generation, Tamanna. My generation is very fortunate because I saw an index go 100x. You don't see that. You see stocks going up 100 times or 1,000 times. A few stocks in your lifetime make your money. Warren Buffett's last year's letter, he talked about 12 decisions over 60 years that really made him his money. If you see, Prashant's analysis when he left HDFC Mutual Fund, it was a score of decisions which helped him make 80,000 crores for investors as the fund manager for HDFC Mutual Fund over 25 years. So, we were very fortunate to enter at a good time. So my experience is wrong. And again, it's at the fag end of a career. So people will say, okay, you've had your life. What are you telling us? But what I have seen with experience is most people don't make money in the markets because it's all the biases that come in. The doctor, psychologist can tell you more about it, but we are afflicted by that. We are not rational human beings. We don't buy low and sell high. We buy high and sell low. So, it is a herd behavior that happens. And unless you have three things, you have the time to study and to manage your own money, you have the training. You are trained for it. The normal MBA or the normal CA or even the CFA doesn't train you to be a portfolio manager. It's an on-the-job training. Like a guild, you have to join as a junior to a research analyst, become a research analyst, then be a junior fund manager. Maybe over 20 years, you will start seeing what is happening in the market correctly. It doesn't come straight away. The third thing, so time, training, and temperament. Temperament is very critical. What Nitin was also mentioning, that you have to leave to the professionals. The non-professionals, amateurs are getting butchered in the markets. Again, we have had very good run in India, so everybody thinks they are champions. They are overestimating their skill set. Again and again, I'm saying that. Why do you have a few fund managers who really outperform and who have built multi-generational wealth for investors? That's because it's a very tough job. In fact, Jeff Bezos had asked Warren Buffett in a podcast, he said, Warren, your methods are very clear, books have been written, you put it very simply year after year, every speech. It is so easy to follow you. Why isn't everybody doing what you do and becoming a Warren Buffett? He says, it's simple, but it's not easy because people don't have the discipline. If you have the discipline, if you are a professional, by all means do it. 1 out of 100 will have all that, or maybe 1 out of 1,000. At least in my career, I have not seen too many of them. And we could not promote people to fund management. It's not like a skill set. It is on the job, very hard grind, meeting investors, meeting companies, analyzing a lot of data. Now, of course, with algos and computers, half of the fund managers are being replaced by computers. That's a recipe for disaster. We saw that in '87 with program trading, leading to a big market crash. You will see that because it's the same algos written by similar software guys which will act in a similar manner.